Most people believe bull runs start when the news turns positive and markets are already going up. But history shows us something very different. Every major bull run begins quietly, during a time when uncertainty, fear, and confusion dominate the market. The biggest money is never made when everyone feels confident. It is made when smart investors position themselves early, long before headlines confirm what is happening. Today, Wall Street is already looking ahead, and many insiders believe the next major bull run could take shape in 2026. To understand why 2026 is so important, we first need to understand how market cycles actually work. Markets move in patterns driven by liquidity, interest rates, and innovation. After periods of high inflation and aggressive interest rate hikes, economies naturally slow down. Once inflation cools and central banks shift their stance, liquidity begins to return. This transition phase is often uncomfortable for investors, but it creates the foundation for long-term growth. Right now, global markets appear to be in that exact transition phase. One of the strongest reasons Wall Street is focused on 2026 is the interest rate cycle. High interest rates restrict growth, slow down borrowing, and reduce risk appetite. However, when rate cuts begin, capital flows back into the system. Businesses expand, consumers spend more freely, and stock valuations start to rise. Another major factor shaping the 2026 outlook is the evolution of artificial intelligence. In recent years, AI has been driven largely by excitement and speculation. By 2026, Wall Street expects AI to move beyond hype and become a true earnings engine. Companies building AI infrastructure, data centers, cloud platforms, and enterprise software are positioned to benefit from long-term demand. At the same time, energy and infrastructure are quietly becoming some of the most important parts of the next market cycle. AI, electric vehicles, and digital services all require massive amounts of power. This has brought renewed attention to clean energy, power grids, and critical infrastructure investments. While these sectors may not always dominate headlines, Wall Street views them as essential for sustaining future growth. As capital rotates into these areas, they could play a key role in the next bull run. When it comes to stocks versus crypto, institutional investors are taking a balanced approach. Stocks remain the foundation of most portfolios, especially high-quality companies and diversified ETFs. One of the biggest mistakes retail investors make is waiting for confirmation. By the time a bull run is obvious, prices are already significantly higher. Bull runs are never announced in advance. They begin when most people are still uncertain and end when everyone believes they will last forever. The next major opportunity may already be forming beneath the surface.